Hey everyone, we just received CPI for the month of May. So let's take a look at it. We're also going to look at a couple other upcoming things and see how the market reacted. Consider hitting the like, subscribe, ring the notification bell if you like these videos. And let's go take a look at CPI. And we are continuing to trend down. We are now at a 4% CPI, which I think is fantastic. If you guys saw my last video, I projected that we were going to be somewhere in the low fours, but I didn't necessarily expect 4 on the dot. And I think that's pretty good news, and the markets do as well. Now, before we look at the market's reaction, I want to show you a couple specific things on CPI. Now, you can see from April to May, we have some huge moves down on a couple of things, specifically energy, gasoline, fuel oil. Those are all down pretty good. You'll notice though, one thing however is up, and that's going to be used cars and trucks. And in my area, I've specifically noticed that as well. Now, looking over the 12 months, you'll notice on the 12 month, the energy category is down massively. We have negative 20% on energy commodities, almost negative 20% on gasoline. Fuel oil is negative 37%. You'll notice food has gone up, and the biggest move up goes to transportation services. But overall, you see in general, most things are coming down pretty massively. And I think that's a very good sign that we're now at a 4% CPI. I do expect the next time we're going to be in the 3s somewhere. And remembering what I said in the last video, the Fed doesn't have to stop raising rates once we get to 2%. And before we're at 2%, I expect the Fed is actually going to be lowering rates because it takes time for these rates to really be felt in the market. But let me know what you think is going to happen with the Fed meeting. Are we going to see one more rate hike, or is the Fed going to pause? I'm personally not too worried about either because I know we are at the end of the rate hikes. We may see one last rate hike. We may get some surprise data and see another. However, I do think we are at the very tail end of these rate hikes, and I do expect the next thing to get crushed is the housing market. And I purchased my home nearly a year ago now, and I could only imagine the rates people are having to deal with at this point in time. So much of my mortgage goes to interest, it's insane. And I do suspect the consumer can only deal with this for so long until they continue to rack up those credit cards, deal with an unforeseen emergency while living paycheck to paycheck, which finally brings you under. It's very sad and unfortunate, but it is something I'm expecting. I'm expecting the housing market to have a bit of pain ahead because it could literally be months until we do see the Fed start lowering rates. And it could be potentially years until we get towards around a 2%, 3% interest rate. So I do suspect these rate hikes that we've seen throughout 2022 and part of 2023, this will heavily affect the housing market. And despite prices cooling down, that's really all we've seen so far in the housing market. There is still a bit of demand because people with those lower interest rates aren't very willing to sell. And I don't necessarily blame them. But I'm getting a little bit off track here. Let's look at some upcoming data. Another thing that's upcoming that I think is important to watch for is PPI's release. And this is going to be on June 14th, the same day as the Fed meeting. And to be fair, the Fed meeting started today as well, but we're really going to get our rate hike decisions and all that stuff tomorrow. Now, I also wanted to show you what the forecast for PPI is. And we're expected to see a 1.5% increase year over year. And when you look at what we were at about a year ago, it blows your mind. We were at around 10%. Now's the forecast. What we actually got on the month of June was 11.3%. Now, I do expect this to continue down, and we may even see these numbers turn negative. And the last time we saw that was before all this money printing, before the economy just went crazy during 2020. We actually saw some negative numbers here back in 2020 for a couple of months, and then the money printing came up, producers raised their prices. We of course had the supply shock, huge supply and demand imbalances, and PPI just started skyrocketing all the way to that peak of 11.5%. And you can see now that, and at least where PPI is concerned, we are under that 2%. And I do expect in the coming months, CPI will be in the 3s in a matter of time. And I want to show you something specifically here that I think kind of gives us an idea of the Fed's hand. And it says the Fed will likely leave rates unchanged, so we might not get a rate hike, but they will warn that additional tightening is still possible in the months ahead. That sounds like they're trying to be hawkish, but to me that sounds pretty dovish. They're trying to sound like, yeah, well, we can still raise rate hikes if we need to, but once we see that actual pause, I doubt they're going to double down, turn around and get back to rate hikes unless extremely necessary, unless we just see a blow up on PPI, CPI, inflation starts going back up. I do think that, the trend will continue. Once we see a pause, that'll kick off things in the coming months to actually start seeing rate cuts. But I still do think rate cuts are going to be very, very late 2023, if not beginning of 2024. But the words the Fed use continue to change, and to me they sound better and better as we get closer to that 2% inflation. And looking at the general market, there's definitely time today for things to drastically change, as we come up to the Fed decision tomorrow. But so far things are looking quite good. And the same with small caps that I'm watching specifically, ChargePoint and a few others. ChargePoint finally broke $10, but just looking over here, you'll see some of the major large caps are moving up pretty good. Tesla nearly up 4%, Nvidia up 3%, the banking sector up pretty nicely. And that gives us a sign, you know, that when you see the banking sector up during these rate hike decisions, people playing those bank stocks see that that low CPI that we just saw, or lower CPI I should say, is a positive as we enter this Fed meeting, and it gives us just a little more likelihood that the Fed may not raise rates anymore. But let me know what you guys think about CPI. I think we can breathe a sigh of relief now that we're not in the mid to high fours anymore, now that we're still seeing that trend continue down, and I do expect to continue to see that. I do expect that in the coming months we're going to be well into the low threes and soon into the twos. And while I don't necessarily expect another rate hike, I do think it's still possible, and if they are planning on more rate hikes, it's better to do them now than to change their stance, pause, and then suddenly start raising again. I think that would really shake the market up, and it would be better for them to just bite the bullet, raise the rates one more time, and then be sure that we're gonna get that inflation to continue to come down and not rear its ugly head again. But if the Fed wants a soft landing, they have to tread very carefully at this point, in my opinion. And too many more rate hikes will destroy the consumer, could destroy more banks, and will crash the housing market. But let me know what you guys think below. Thanks as always for watching. Everything I went over will be down below for you. And also consider checking out some links down below for some free stocks, cryptos. Consider joining my membership for only $2 a month. I appreciate your support, and I'll see you guys later.